We're in San Francisco, so I want to talk about a big announcement here in the Valley earlier this week, and that is the Apple Goldman Sachs credit card. Now, the early reviews are in. Many have been underwhelmed, but does that miss the point? Is this a way for Goldman Sachs to build out its consumer banking business? Is that going to make it more competitive against your consumer banking business?
Well, my reaction when I saw the announcement was, first, competitively, all of the features that are in that card are offerings we have today. The card plastic for swiping itself all the way through to the mobile and electronic wallet. The idea that there'd be special rewards for the use of the mobile is only good for us, because the more we train consumers on how to use our mobile applications, Zelle for payments or pay at the point of service electronically, that's just good for the industry.
Right, and I think you're correct in that everything that it's offering is already out there, but perhaps not packaged together in this sort of neat digital Apple Wallet package. A lot of millennials, though, still don't have credit cards. So is this going to open them up? Do you think it's going to be effective, perhaps not in getting people to change, but bringing a wider audience and a wider market into credit cards through Goldman and Apple?
Well, almost every major bank is in the Apple Wallet today. And so, again, I'm not sure that our job for our clients and customers is to be where they want us, when they want us, 24/7. And those offerings, I think, really work, and our customer growth and our utilization prove it.
So you don't think this is a game changer for Apple or Goldman Sachs?
We see new cards in the marketplace all the time. I think it's an interesting announcement, and we'll pay a lot of attention to it, and we'll always do what's best for our clients.
Okay. Now, here at this conference, data privacy, also a big topic in Silicon Valley. This morning, a story in the Journal about Equifax and FICO working together to sell more consumer data to the banks. Now, as B of A, do you buy that data? Are you worried at all about Equifax's security measures given the latest breach? And its CEO recently said that it's out of the penalty box with its clients. Is that true?
Well, I think we look at it this way. We have for decades carried the most personal customer information that exists, and we manage their money. So our entire architecture is built on the knowledge that we're in the trust business. You know also that we're regulated, so the standards to which we're held to have been high for a long time. Whether we buy new data or not, I think, is less the issue for this morning, and but because we don't lack for it. In order to serve our customers, they give us a ton of it, and we protect it mightily.
Is Equifax out of the penalty box?
Well, I honestly believe that we should all behave as if we're under scrutiny every day, penalty box or not. Our customers are the ones whose lens really matters, and their standards couldn't be higher.
Now, you did mention you already have a huge amount of data. You use it to make loans and sell different products. A lot of the backlash that we've seen over the last few years has been directed at big technology, big names like Facebook and Google. Banking has largely been at the sidelines. Do you think that that's going to change in the year ahead? Should banks be under the same scrutiny? Should you guys be working with regulators right now to shape this legislation that's coming into place?
Well, we work with regulators every day, and we design our systems with the assumption that as hard as customers work to protect their data, they may not be as successful as they would hope to be. So we design everything to assume that we've got to protect our customers at the point at which their data is used. We've been under regulatory coverage for a long, long time, and I think that has given us a culture of protection, a culture of safety. We're the company that describes its strategy in 2 words: responsible growth, and responsibility includes protecting customer data.
Do you think that's different at big tech companies? Do you think there's work to do here for that?
Well, I do think the standards are different. That's a fact. There's no other way to think about that. I think what has happened in the marketplace has proven that we have to be much more thoughtful about how we protect customers and how we assert that customers own their own data. We operate under GDPR outside of the United States and design what we do in the U.S. as if we were under that here.
Now, we've only got a minute left, but I got to get to this because my colleague Hugh Sons, he interviewed you earlier this week, made a lot of headlines. Bank of America has the most blockchain-related patents, yet you said you are highly skeptical. You said in this interview, show me a use case, and I was shocked because that's like blasphemy here, especially in San Francisco. Explain a little bit, and also tell me, you said you haven't received any backlash against your comments.
No, I haven't. They'll probably throw rocks at us today, Deirdre, when we're on stage, but, we do have 90 patents in the distributed ledger technology space. That is because if blockchain or if DLT becomes a reality, we want to be ready, and we want to be able to capture the benefits for our clients. That said, I've not seen a use case at scale, and I've been in this job for 9 years now. I've seen a lot of hyper-focus on individual technologies come and go, and I sort of was trying to throw down the gauntlet and say, show me a use case.
Right. So 10 years from now, are we going to see one or not? If you had to bet?
If I had to bet, I am bearish.
Okay.
I think that, and I hope that it works. I want it to make us better, but I have not yet seen a use case that tells me I'll be dependent on it in 10 years.